All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you. And the first thing that I want to talk about is Cardano's new hard fork. It's now a multi-asset blockchain. And this is for the first time. Cardano came out in 2017 and it's basically had no features for 4 years. So they've been working on this hard for quite a long time. There's still more forks, upgrades, etc. to go in Cardano. But for a long time, all you could do is basically just send Cardano back and forth on the blockchain. But today the hard fork has occurred. It's named Mary the hard fork, which will allow users to create new tokens that run on Cardano natively, just as Cardano itself does. Enabling new tokens was one of the first big use cases that caught on for Ethereum, enabling 2017's multi-billion-dollar initial coin offering splurge. And we all know how fun that was. In a video update previewing the hard fork, Charles Hoskinson, founder of IOHK, the company behind Cardano, called the move historic. Hoskinson said that for node operators, the transition should be fairly simple. They just need to update their software and everything should work well. We've been testing it for almost a month, and the test looks good. Exchanges are happy, he said in the video. Enabling new tokens is a step on the path to full smart contract capability, which they are now the third on CoinMarketCap. Ironically, a little bit down today. However, I just want to add to this article, and this is just pure speculation from my own part here and maybe advice for you guys, maybe something to consider. The first Cardano tokens, and particularly the first DeFi platform that will come to Cardano, I don't know which one that's going to be. I don't know what it's going to be called, but sooner or later there are going to be tokens on Cardano, and sending them back and forth on the Cardano blockchain is going to be much, much easier than Ethereum, because Ethereum right now is absolutely clogged to the gills. Uniswap, etc., cost a lot of money to be able to do a simple transaction on, which is just simply outprices, I'd say, the majority of users off of Uniswap, etc., unless you're dealing with a large volume. So the first token and the first DeFi platform in particular, or maybe first tokens, we'll maybe pluralize those, will likely see very, very large gains. Something along the lines of like Compound that is to, Ethereum, etc., and other various tokens for DeFi. Those are going to be on ADA soon, and when they are, it's likely that they're going to be pretty lucrative. Why? Well, first of all, the fees are going to be much lower on Cardano, and two, because it's crypto. If you're new to crypto, you might be like, I don't know what that means. But crypto, just because there's something new, typically it just explodes in price. So keep a lookout for the first tokens and DeFi platform on Cardano, because it's probably going to be big. And even if they fail over time, just make sure you take your profits. But moving on from that, I just want to talk about something real quick. The prices of crypto going back up now. We're at nearly at $1.5 trillion market cap again. My previous video I made yesterday, I talked about at the end of it how everybody bought up all the bonds from the Federal Reserve and they raised all their money for the 1.9 trillion stimulus package. And basically people sell their stocks off when the yields of the bonds go way up. So it kind of brings down the market. It brought down the crypto market as well. And now that the helicopter money is going to rain out from the stimulus package that should occur within a month or, 2 months or something, however slow the government goes. And now things are starting to go back up, including the stock market and the crypto market. So we can see here the Dow Jones up 603 points today, nearly 2%. The S&P up over 2%, 2.38% actually. The NASDAQ up 3% today. So big boost in the stock market. So now that everybody bought off all those bonds and the yields went back down, they're no longer doing that. They're going right back to stocks, and that's going to be pushing up the price of Bitcoin. And indeed, that was sort of my guess. And indeed, today it did come back up. So who knows how long it will last? After all, it is cryptocurrency. So more Bitcoin. Michael Saylor's MicroStrategy just keeps buying more Bitcoin. So they bought even more Bitcoin. Yes, they bought slightly over $1 billion. It was like a week ago, and it wasn't good enough for him. I totally understand. I think that anybody in cryptocurrency completely understands that. You bought Bitcoin and you're like, you know what? I don't think I bought enough Bitcoin. That's true. MicroStrategy's Bitcoin buying spree shows no signs of slowing after CEO Michael Saylor announced the purchase of another 328 Bitcoin on Monday. The acquisition, which was paid for in cash, cost the firm around $15 million. So a modest $15 million worth of Bitcoin, in comparison to their previous $1 billion purchase. But hey, just goes to show more Bitcoin buying going on, buying that dip, and equated to an average coin price of $45,710 at the time of purchase. The investment takes MicroStrategy's total Bitcoin holdings to 90,859 coins, which you better get your coins before they buy them all, a haul worth $4.3 billion based on the current price. The firm has essentially dollar cost averaged into Bitcoin over the course of the past 5 months, leaving the average price of each of its Bitcoin purchases at $24,063 per coin. So quite profitable indeed. So moving on here to some different news. Bitcoin balance sheets. 42 companies hold 1.3 million Bitcoin worth more than $65 billion. So it became a trend to add Bitcoin to a company's balance sheet, and the company MicroStrategy invoked the trend when the business purchased $250 million worth of Bitcoin, and since then a great number of companies have followed suit, and Bitcoin's value has skyrocketed as well. So MicroStrategy bought way more now than a total of $250 million, but they started with the $250 million, and then they actually made a conference for other companies to come and learn how they can legally buy Bitcoin and put it on their balance sheet and all the ins and outs of the legalities, etc. of that. And now many others are doing the same. For instance, at the end of 2020, 29 firms held around 1.1 million Bitcoin worth more than $30 billion using exchange rates on December 28th. Moreover, at the time, the 29 companies owned 5.48% of the entire 21 million Bitcoin supply. Today, according to BitcoinTreasuries.org statistics, the numbers have changed a great deal. There's now 42 companies listed on the web portal, showing firms from all around the world that hold Bitcoin treasuries. So we got this big list. MicroStrategy holding 90,000 Bitcoin, Tesla holding 48,000, Galaxy Digital Holdings at 16,000, and so on and so on. The only thing I don't actually see on here, unless they're under some parent company or something like that, is Mass Mutual Insurance, which bought $100 million worth of Bitcoin, and that was a few months ago. And so I don't see them on here, again, unless they're under some kind of different parent company or something like that, and they're listed as something else. But you can see here Grayscale at 649,000 Bitcoin, although technically it's not necessarily Grayscale's Bitcoin as it is MicroStrategy's Bitcoin. There is a difference between the two. Grayscale is mostly just all investors, and they work with GBTC, so it's fractional shares of Bitcoin in the form of GBTC, but they do have to have Bitcoin in holdings along with it. But they are certainly the biggest holder as an investment firm, but not necessarily as a private company type deal. And CoinShares, 69,730. So huge amounts of Bitcoin being bought up by companies. And this is just 42 of them. And there may be more. Again, I don't see Mass Mutual on here unless I'm totally blind, but that's, been known to happen. So moving on here, Goldman Sachs relaunching crypto trading desk after 3-year pause. So this is pretty big. Basically, Goldman Sachs may pursue a Bitcoin ETF as it deepens its push into digital assets. So investment bank Goldman Sachs has relaunched its cryptocurrency trading desk after a 3-year hiatus and plans to once again support Bitcoin futures trading. A source familiar with the matter confirmed to CoinDesk. Contrary to an earlier report by Reuters, the source said the service would resume in mid-March, not next week. The desk is part of a broader push into digital assets that may see Goldman attempt to stage a Bitcoin exchange-traded fund. Reuters said it will be part of Goldman's U.S. Global Markets division. The bank had originally planned to launch a crypto desk in 2017, but shelved those plans in 2018 due to regulatory concerns and the bear market at that too, right? CoinDesk reported in January that Goldman was looking to re-enter the cryptocurrency industry, including with a custody offering within the next month. So again, these big banks, these big investment firms, these big buyers like Kevin O'Leary that used to call Bitcoin garbage, that used to call Bitcoin a fraud, that used to call Bitcoin rat poison squared, or I think that was technically Either way, Warren Buffett. But either way, now they're all buying Bitcoin. Now it's not so much of a fad. Once it hits $50,000, golly, what a coincidence. It's just not a fad anymore. After 12 years, it hits 50,000. Now it's not a fad. But I wish they were thinking that it wasn't a fad when it was 3 cents. But too late. Actually, you know what? Let me reverse that. Not too late, because if you're a believer in Bitcoin, then you're probably a believer in the fact that one day it's going to be $100,000, one day it's going to be $1 million. How much more than that in the future, I couldn't really say. But I mean, buying in now and going to $100,000 is double your profit, and that ain't a joke. So CBOE applies to list first Bitcoin ETF in the United States. So this has been a thing for quite a while. The companies going around trying to make ETFs in the United States, an exchange-traded fund. So there's a big difference between all these investment firms buying it, etc., these exchanges, yada, yada. But then there's a big difference between a Bitcoin ETF, which is a big package thing. It's kind of like mutual stock, but mutual stock is just traded and sold once at the end of the day, whereas these ETFs are packaged cryptocurrencies that can be traded multiple times a day, and usually derivatives, and they fail. So this is probably the 20th, 30th, 50th time that an ETF has been attempted to be made in the United States, and they always seem to get rejected. So we have Goldman Sachs trying to make an ETF. Now we have CBOE, the Bitcoin futures company. The equities market operator has filed a proposal with the SEC to list and trade shares in the proposed Van Eck Bitcoin Trust. In the closing days of 2020, investment firm Van Eck filed an application with the U.S. SEC to form the Van Eck Bitcoin Trust, an exchange-traded fund. Equities market operator CBOE, BZX Exchange, has now filed a proposal with the SEC to list and trade shares in that trust. The filing says builds on Van Eck's earlier S1 filing, and represents the next big step in bringing what could be the first U.S. Bitcoin ETF to the market. The proposed rule change would list and trade shares of the Van Eck Bitcoin Trust under BZX Rule 14.11, whatever that means. Commodity-based trust shares, according to the rule, shares would be redeemable for Bitcoin. So real, actual Bitcoin instead of like CBE futures that just trades paper and is just basically total garbage. But you can see here the buying has not stopped. Bitcoin dipped in price, and these companies are, well, quite frankly, a little bit better organized than the average individual. Now it's not just, panic sell and it dives down to nothing after a whole bunch of ICOs and Ponzi schemes, etc. in 2017 all sell at once. That's a major problem. Now we have somewhat more diamondy hands. We have somewhat more responsible hands. And I'm not trying to bootlick the institutions, because I don't believe the institutions should be on Bitcoin. I think it's the antithesis of Bitcoin. I don't think it was designed for institutions. In fact, it was just designed to mine on your CPU, or probably was an oversight. The fact that there would be so many people in the world mining on a CPU, you would never get any. Also, Satoshi Nakamoto kind of didn't see pool mining either. But hey, fair enough. Either way, it was designed, for the people to use as an intermediary, over the internet without a third party, and be able to send a currency back and forth in a peer-to-peer manner. And now we have these institutions, basically all of the banks that Satoshi kind of hated and made Bitcoin against are now buying it. So, sorry, Satoshi. Once again, two videos in a row, I got to go, whoops. But they are certainly raising the price of Bitcoin pretty dramatically, and they have pretty diamondy hands. I mean, we're talking now institutions and investment firms that definitely don't want to be selling anytime soon. They want that money. They want that big, big, big payoff over time, etc. And now that we have these ETFs coming, they're buying the dips. We had that dip in Bitcoin down to $43,000, all the way from like $58,000. We were nearly at $60,000. We had this big dip. People started to panic. Not me. Been in it for years and years now, and nothing really particularly bothers me. I just keep buying and buying as it goes down. I buy as it goes up. It doesn't really matter to me anymore. But now that we have these diamond hands, we see people like MicroStrategy buying $15 million of it as it dips. We see MicroStrategy buying literally $1 billion as it dips, although I think they actually technically bought the $1 billion worth of it at like 50 or 52,000, which is an okay buy, I suppose. Moving on to CoinMarketCap here, once again, at a $1.5 trillion market cap. In fact, we're only like $1 billion away from that $1.5 trillion market cap. So it might as well be. Just rounding Bitcoin, everything kind of going back up now. Ironically, Cardano, one of the few currencies in the top that is currently down. And that's probably makes sense. It's probably just a cooling off because the price got a little bit too high. It really just went sort of hyperbolic on us. As you can see, we'll go to the 7-day chart, get that all-time high there of around $1.50 or so, $1.46, somewhere around there, depends on the exchange, of course. And that growth was simply too fast. As we've seen this in the past with stocks, cryptocurrencies, anything that grows too fast is bound to come down pretty quickly. And it's just a matter of catching the dip as it comes down. So I do find it a little bit strange that the price of Cardano is cooling down basically on the same day that their hard fork comes out where there are tokens in DeFi. And once again, I have to remind you guys, if you are sort of a speculative investor in cryptocurrency, make sure you look into when you see tokens for Cardano or when you see a DeFi platform come out on the ADA blockchain. Just because it's new, it's going to be low fees. It's likely going to be easier to use maybe than Ethereum. Who knows? We'll have to see. It may actually be a little bit harder until we have sort of like MetaMask-ish for ADA. But the hype, the FOMO, will be pretty real. Let's just say that. I think we can generally agree, even if you don't like Cardano, that the first tokens in the first DeFi platform that actually come out as contracts on the blockchain are going to be pretty FOMO heavy. Let's just put it that way. But that's about all I have for you guys today. Make sure you like, subscribe, and share the video as well. That helps me out a lot. My social media in the description below. And as usual, I will see you guys next time.